Breakout and down trading strategies for day traders. They are used to capture quick profits in short-term price fluctuations and can be applied to many different markets, including stocks, futures, options, forex, and cryptocurrencies. When a currency moves outside the confines of an identified price level and trade increases for that currency, this is called a breakout. In this type of trade, you take a long position, the belief that the price will go up, if the stock price moves higher after meeting resistance, or takes a short position, the belief that the price will go down, if the stock price moves lower after meeting support. There are several different types of breakout trading strategies, but one of the most popular is the channel breakout trading strategy. This strategy looks for stocks that are trading in a well-defined range, support and resistance levels, and then enters a trade when the stock price breaks out of that range. This strategy uses the first few minutes of trading to identify the day's high and low, and then enters a trade when the stock price breaks out of that range. The range breakout strategy is similar to the opening range breakout, except it focuses on entering a trade at the end of the trading session when stocks have settled down and volatility has decreased. The range breakout strategy identifies stocks that have experienced volatile trading action and buy them if they close near their highs for the day. On the other hand, if the stock closes near its lows for the day, it sells those positions instead. There are many different ways to trade breakouts, but one of the most popular is the channel breakout trading strategy. This strategy looks for a candlestick pattern that has formed outside of a defined channel. Channel breakout trading strategies typically carry less risk than range breakout strategies because there are limits as to how far in either direction prices can go before they hit the opposite boundary. But if you are looking for a strategy with high rewards and higher risks, range breakout strategies might be what you need. Range breakout trading strategies allow you to catch larger swings in the price of stocks by targeting specific levels of support and resistance. For example, when a company hits new highs, or lows, in its share price over consecutive days, traders might decide to buy, or sell, stocks near those levels with the assumption that prices will continue to rise, or fall. One advantage of range breakout trading is that traders don't need very accurate predictions because all they have to do is predict how far prices will go before reversing course within each rally or sell-off. One of the most popular breakout strategies is the channel breakout trading strategy. The key to this strategy is to identify a price channel that has formed on the chart. A price channel is simply a range that prices have been trading in for some time. The day trading breakout strategy is a little different from the traditional breakout strategy. When using the opening range breakout strategy, traders will look for two or more consecutive candles with an opening range between two predetermined values. These types work the same way as the opening range breakout strategy but with only one set of predetermined values instead of two. For example, if we are looking at an hourly range breakout strategy, we would use Fibonacci retracement levels of 38%. 50%, and 61%. If you're day trading, you need to know how to tell if a stock is about to spike or break down. This knowledge will help you choose the right strategy, whether it's a channel breakout trading strategy or a range breakout strategy, and make the most of the opportunity. If so, you'll want to use an opening range breakout strategy as your entry point. The idea is that these bullish patterns create momentum in your favor, so take advantage of them by using either a range breakout strategy with tight stops or enter on breaking out at the pennant peak. When markets are volatile, it becomes more difficult to gauge which direction stocks will go, so use channels as your trading range instead of trying to trade too aggressively and risking large losses. A good example would be to buy near the upper range of a channel when prices have been gradually moving up over time but have suddenly pulled back to test support. Channel breakout trading strategies involve buying near the upper range and then selling when prices retest resistance, or selling near the lower range when prices pull back to test support again. Range breakout strategies involve waiting for prices to move from one side of the range boundary to another before buying or selling based on whether prices are trending higher or lower. A channel breakout trading strategy can be used to trade these breakouts. To find stocks that are ripe for a breakout, look for those that are trading in a range with tight Bollinger Bands. A trader would enter a position on the first bar that trades outside of this range. The long leg of the range breakout strategy involves buying after breaking through the resistance level and selling after breaking through the support level. The short leg of the range breakout strategy involves selling after breaking through resistance and buying after breaking through support. For example, a range breakout strategy looks for a sustained move outside of an established trading range. An opening range breakout strategy identifies potential breakouts at the start of the trading day. And a channel breakout trading strategy looks for breakouts from price patterns that form channels. A range breakout strategy has been helpful when a stock is moving within a tight channel, not much volatility. Opening range breakouts have been helpful when prices have remained relatively stagnant for hours or days with no major movement. A channel breakout trading strategy can also work well with stocks moving within tight channels where there is little volatility in either direction. One trader sees the channel breakout trade strategy and buys on both sides of the channel support level because he believes the trend will continue and wants to maximize his profits if that happens. With a channel breakout trading strategy, one successful trade could double your money.